Asian markets faced significant declines on Thursday, with shares dropping and bond yields spiking due to heightened concerns over inflation. The Japanese yen's dramatic slide past 160 per dollar has traders anticipating potential intervention from Japan's government to stabilize the currency. The US dollar reached 6-week highs against both the British pound and the New Zealand dollar, trading at 160.4 yen, close to a 38-year peak. This nervous market sentiment particularly affected high-risk financial sectors, with Nasdaq futures dropping 0.4%. Shares in chipmaker Micron Technology fell by 8% in U.S. after-hours trading after meeting revenue expectations rather than exceeding them. In Japan, the Nikkei index fell by 1%, while FTSE futures and European futures both dropped by 0.2%. The MSCI's broadest index of Asia-Pacific, shares outside Japan, fell by 0.7%, with substantial losses in Australia, where rate-sensitive stocks plummeted following unexpected inflation data. ComSec senior economist Ryan Felsman highlighted that Australia's inflation has reached the highest levels among developed countries, prompting the market to reassess the likelihood of further interest rate hikes. Australian 3-year government bond yields surged, reflecting the inflation shock and overnight sell-off in U.S. Treasuries. Swaps markets now predict a 40% chance of the Reserve Bank of Australia hiking rates by 25 basis points in August. The surprise jump in Australian inflation follows a similar unexpected rise in Canadian inflation, adding to market anxiety ahead of the U.S. Federal Reserve's upcoming inflation measure release. Additionally, final U.S. GDP figures, European confidence data, and a speech from Australia's Deputy Central Bank Governor are in focus, along with Sweden's rate decision and the first U.S. presidential debate. In foreign exchange markets, higher U.S. yields have strengthened the dollar, especially against the yen and yuan. China's yuan fell to a 7-month low, driven by a weaker trading band set by the central bank and slowing industrial profit growth. The yen, trading at 171.57 per euro and 160.4 per dollar, remains at levels prompting speculation of Bank of Japan intervention. Japanese Finance Minister Shuichi Suzuki expressed concern over the yen's impact on the economy, indicating close monitoring of currency markets. The New Zealand dollar dipped further to a 6-week low, and the British pound also fell to a 6-week low. The dollar index hit a 2-month high, driven by persistent inflation and robust economic data delaying expected U.S. rate cuts. In commodities, Brent crude futures dropped by 0.2% to $85.07 per barrel, marking a 2.8% decline for the quarter. Gold prices slipped due to rising yields, trading at $2,299 per ounce. Wheat futures hovered near 2-month lows, supported by signs of a strong U.S. harvest and improving weather conditions in Russia.